Okay, the S&P broke its 6-day winning streak. Another winning streak here after that powerful gap we had up last week. And again, the previous winning streak, that was a record, the best winning streak that we've had in 20 years. That record rally at the bottom, the second best day on the S&P 500 in history. Some really powerful moves. And now, the winning streak, we get a pause after the Moody's downgrade on Friday. Market shrugged it off yesterday, gapped lower, but then it rebounded and still managed to close with a small gain. The Dow today down 100 and almost 15 points, down just over 1/4%. The S&P down 0.39%, down 23 points. Did I say up or down with the Dow? It's down. If I said up, I meant down. NASDAQ down 0.38%. The Russell was flat. It actually squeaked out a gain there. The VIX down 0.28%, closing just above 18. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel today. Follow the link below. It'll take you to a secured site and you can donate any amount you want or make it a recurring donation. If you do that, I thank you. I just ask that you do what you can to help out. Most YouTube channels have. Most have sponsors. I choose not to do that because I don't want to sell you stuff. So if you could take a moment to help out, I would really appreciate that. Now, again, in the video, I'll be talking about the bearish inside day, if it plays out, and the rising wedge. So we have some bearish things going on. NASDAQ got a red bar today. We pull back, and if we do, is it a mild pullback, and we end up setting up a divergence here on the awesome oscillator and on the MACD, or I'm sorry, on the RSI. The S&P 500 did not get a red bar today. It still may do it tomorrow. Red bar for NASDAQ is suggesting maybe we get a confirmation to the inside day, but candlesticks mean nothing unless they're confirmed. And if Bitcoin continues higher, the stock market still may follow it higher, or even get a mild pullback, even just to gap support or something. And if we're still in the extended wave 3, or we have this little subwave 4, and still have that extended wave 3 scenario that I've been talking about. So again, no red bar here. Do we get one tomorrow? If we do, does it start a bigger pullback, or is it just a mild pullback and we don't top out until we get divergences? That is certainly possible. We'll be looking for clues. Now, we got a doji today. I'll be talking about this bearish harami cross pattern, which could be a reversal pattern, but a doji can be, if it's not confirmed, a continuation pattern or a reversal pattern. So again, we'll be watching doji and then the larger 2-day pattern, and let me talk about that for just a minute. So we had that Moody's downgrade. The market shrugged it off, but we're down today just a bit. We got a bearish inside day. Now, again, as I always say with candle patterns form, they mean absolutely nothing unless they get confirmation and a follow-through. So we got a doji today. It's a candle of indecision. It's an inside day in that it is contained within the body of the previous day's bar on Monday, the wide range bar, and it just disappeared on me. They must be having an issue. They must be having an issue with the charting program there. But anyways, you can see the doji, the wide range bar. It's a 2-day. It's called a 2-day bearish harami. But because it's a doji harami cross. For the pattern, you have to close below Monday's low. That would confirm it. You need a follow through on top of that to close below whatever low forms if it confirms it, to take out the 10-period moving average. If we get the sell-off right here, now there are two possibilities: that we pull back and get a wave 4 and still have this as an extended wave 3, and we get 4 and 5 and end up forming a divergence on the RSI, and you get something like this where you sell off, but then you come back up and you go higher, and then you get the bigger sell off and you come back towards the 50, towards the cloud, maybe fill some of these gaps, or maybe you get a bigger one right now and fill the gap and then do that and then come back. That's certainly possible. Would be that we just get a pullback and we end up setting up a divergence here on the RSI. We end up setting up a divergence on the awesome oscillator. I've been talking about that possibility. would be we don't have a 5-leg push higher completed, but we have an extended wave 3. It's either still under construction with the pullback and continuing higher, or getting wave 4 and then on into wave 5. Now, the other possibility is that this is done, completed minor wave 1, and we get a bigger pullback right now. But a doji harami cross, we'll see what happens. Over here we got the dojis, and we went sideways and continued on with a continuation pattern, getting above the 200. Remember that big gap we had the previous week? We talked about that. Be looking for clues, but again, that hollow red candlestick at the bottom, I told you everybody was predicting that we were going to have a black Monday crash, and I told you the opposite was going to happen. Still may get a pullback, a smaller pullback, or even a bigger pullback with the Moody's downgrade, the other catalyst. Whether we have an extended wave 3 scenario, really pull back and get a 4 and a 5, or whether we have a 5-leg push higher that's complete, and we get a bigger pullback. Right now we've completed minor wave 1 and we pull back, remains to be seen. And again, we'll be looking for clues. Again, could be a 1, 2, 3, 4, and a 5 here. The signals remain bullish. We start seeing things, momentum turning back to bearish. We start taking out the 10 period, the red line right here, start coming back down, maybe even taking out the 200, filling the gap or whatever. Then again, the risk is we get a bigger pullback right now, or at least a smaller pullback for a wave 4. So those are the possibilities. At some point we're going to pull back. I remain extremely bullish. I think we're going to go make new highs. Bears are telling us this is the next leg down. Bear market up here after we've rallied nearly 23.5%. The rally that they told us was never going to happen back over here when they were telling us we were going to crash. We have a bullish alignment of the moving averages, the 10 above the 50, the green line there, the 20 above the green line, the 50, and a bullish realignment. But sometimes you pull back to those moving averages before going higher than the active support. We could just keep going as long as we hold above that 10 period moving average. You notice we came up to the 10 period here and we pulled back, tried to get above it again, and then pulled back, dropped below it, and then we got above it, and we've been above it. We've been finding support at the 10 period. So again, if you lose that area, then you can get a bigger pullback. So it's certainly possible. Let's take a look at the doji, or I should say the harami pattern. This is the doji, the doji harami cross. Means is we got a doji there. Got the same thing going on with the NASDAQ. It's a bearish reversal pattern, so we'll see what happens. So here's the bearish harami on the right. Again, you get a wide range bar. You have an up day, and then you gap lower, and you have an inside day, which is this pattern right here, wide range bar. It's a bearish harami cross with that doji. You get the bullish wide range bar, then you get the doji. Rather than a narrow red bar, you get a doji. It's a bearish harami cross. Confirmation is a close below the previous day's bar. Same thing here. Close above the previous day's bar is the bullish harami cross. That's what we have right here. That's what we have on the S&P and the NASDAQ today in the daily time frame. Again, the candlestick pattern is meaningless unless it gets confirmed. So even if the pattern gets confirmed, it just might be a more shallow pullback if we're just getting a wave 4 and then we go on up and get a wave 5. If we end up forming a divergence on the RSI and the awesome oscillator here in these daily time frames. And I've been talking about that in each and every video. That possibility is still on the table. Just get a small pullback and then go higher, it could lead to a larger pullback. We have our 50 flattened out, now curling up. Eventually we're going to pull back towards it in all likelihood, the cloud, whether that's now just get a more shallow pullback and then go higher by a bigger pullback. That remains to be seen. So be looking for clues. If the candlestick is not confirmed, it means nothing. Coin goes higher, as I think it's going to, then it could just continue to follow Bitcoin. Reached an extreme on the RSI. It's starting to turn down off of extremes there at 70, and you've got this candle. So we'll see if we get confirmation. If we do, and if we take out the 10 period moving average, red line there, We get confirmation. Is it a shallow pullback, or do we get the deeper one right now? Is it a wave 2, or is it the wave 4 in minor wave 1? Is it our subwave 4? And we don't want to rule that possibility out. Same exact thing for the NASDAQ. Again, a doji candlestick, an inside day. So again, we've reached extremes on the R side. Do we see these divergences form? We get a small pullback for a wave 4, and then we end up getting a larger divergence developing. I should just say a divergence. Do have one already on the 60-minute charts, but do we end up seeing a divergence develop here where we get a smaller pullback and then go higher and then get the larger pullback? Could play out that way. We'll see. Thing here, if on the S&P 500 is minor wave 1 done? You know, I believe we finished intermediate wave 4 here. That we're getting intermediate wave 5, and this is the first wave of it. Is it done? And we're now going to get minor wave 2 after a nearly 23.5% rise off of the lows. Over the internet, it's being said this is a bear market rally, and this is by the people that told us the rally was never going to happen. These are the people that told us we were going to have the crash at the bottom. I don't think we're in a bear market rally. I don't think the bear market has started. It dropped 21%. That's a bear market. Poppycock. We've had several other times where we've had drops of more than 20% in this long-term bull market. Probably one of them. I believe this move is corrective. We hit major support about over the weekend. In order to have a bear market, you got to go back down and take out the 200-week moving average. You got to go down and take out the 50-month moving average. You got to go down and take out the trend lines that we bounced off of down here in horizontal support. We didn't do that. We bounced off those levels. That's very bullish. So is minor wave done? And we're pulling back, and we've got this 5-leg push higher here that I've marked. These subwaves, and we pull back to the cloud right now, or the extended wave 3 scenario, that extended wave 3 is still under construction. We pull back and it's still going, or we pull back and we get the wave 4, wave 4 in the larger extended wave 3 scenario. Of those scenarios, either one of these scenarios are very possible. You know, I don't think is on the table is the next leg down, and you got people saying we're going to get that Black Monday crash with the Moody's announcement. It didn't happen. Their bears are saying, well, now we begin the next leg of the bear market. Next leg down. Got a problem because this is corrective. And if it's a larger ABC or a WXY complex correction, it's a corrective pattern, meaning you're still going to end up going to new highs. Take out the 200-week, got to take out the 50-month in order to have a bear market. I don't think we do it. So again, I'll be looking for a higher low, but I'm telling you, at some point, whether now or whether we get the extended wave 3 scenario, whether now or later, start selling off, bears are going to go, tell us, okay, here comes the next leg down, and we're going to get a higher low, and then we're going to go up and make new highs. I talked about the possibility that we get the extended wave 3 and go make new highs and come up into this trend line right here. That is still a possibility, or at least come closer to the peak over here. I think Bitcoin has got a pretty good shot that it's going to go make new highs, get a fake out, breakout, come up here to the previous high like this. You get a breakout above it, and then you get your pullback. I think Bitcoin's going to do that. Whether the stock market will follow it or not, we'll see. But the stock market has been following Bitcoin. It followed Bitcoin down. Now it's following Bitcoin back up. And this is why I was telling you that we're going to eventually see the stock market play catch up to Bitcoin and get back above. I told you we're going to go to the 200 periods, but I told you just blow right past it, which we are doing now, just as Bitcoin has done. I talked about this at great length and detail over and over. So we'll be watching which scenario. Now, this is the scenario that's saying, hey, we're seeing minor wave 1 now come to a conclusion. We're about to come to a conclusion, and we get the wave 2. The other scenario is extended wave 3, which might look something like this, where we end up gravitating to a new high, hitting this trend line, but then coming back. Now, I've talked about extended wave 3 still being in play, whether the extended wave 3 is not done and we're just getting this smaller subwave in it, and then we go up here and finish the extended wave 3 up here for 4 and 5, smaller microwaves, then get the 4, then get the 5. That's certainly possible. Or other scenarios that we've wrapped up the extended wave 3, not up here, but down here, and we get this 4, and then we get a 5. I think that this is still very, very possible right here, where we have an extended wave 3 with 1, 2. This might be the 3rd, we get the 4th, and then we get the 5th, all of it being an extended wave 3. Certainly possible. A couple different ways to count it. This is something that I think is very possible. So do we get this microwave 4 or this subwave 4 up here right now, this extended wave 3 scenario, or do we get that minor wave 2 and this is done? So this is still on the table right here. Could still end up forming this larger inverse head and shoulders pattern. I think Bitcoin's doing that. Go watch my latest Bitcoin video. I'll link it at the end of this video. I think Bitcoin popped to new highs. And if it does, the stock market could certainly follow. So I'll be watching to see what becomes of this bearish inside day, if anything. Give us a mild pullback, or do we start something bigger? Again, I don't know the future. I'm just looking at support and resistance levels. Stop major support. Just went past the 78.6 Fibonacci of resistance and got above it, so there's a good chance we keep going. Different ways it can play out. We don't know the future, so we need to be very flexible and open-minded. I'm longer-term bullish. We're going to get a bigger pullback at some point, but I certainly don't know the future. I mean, we can make educated decisions based on things that we see and using mathematically based indicators. We know that we're in a bullish environment now with signals flipping back to bullish. Start seeing momentum turn, then we get the smaller pullback or the larger pullback right now. If we get the smaller pullback, it's either the smaller wave 4 or, again, the wave 4 here. The larger subwave 4. Do we get the micro wave 4 or a larger subwave 4? This larger extended wave 3 scenario. So I wanted to take the time to show you this. Kind of going sideways right now. Now here's the scenario where we're wrapping up minor wave 1 right now. We'll get minor wave 2. We've got this divergence. We don't have one on the daily chart, but we have one here on the 60-minute chart. That could give us a pullback. Rising wedge scenario, but candlestick is not confirmed. If we just get a smaller pullback, again, say we don't confirm the candlestick and keep going, or get a smaller pullback and then keep going, again, you could still build upon this divergence and get a larger divergence at higher levels. So do keep that in mind. Signals are still bullish here. You're still holding above the 50-period moving average. You're still above the 10 in the daily. You're still above the cloud. You're still above the trend line. So again, signals remain bullish. Remains bullish. Risk is right now that we get this smaller inverse head and shoulders. I talked about the one in the daily where it's up at higher levels. That's certainly possible. But if we turn here and get the minor wave 2, then you get this smaller one right here and now. So that is still in play. We'll continue to be looking for clues. But again, absolutely incredible. Ellie, I told you, going to bottom with the tariffs because everybody's calling for a crash. The opposite is going to happen. And that was correct. When everybody believes that the stock market is going to have a Black Monday crash like we had at the bottom, like some were calling for right after the Moody's announcement. Of some people were saying the same thing down here. Everybody believes one thing, the opposite is going to happen. And the doji that we got on the NASDAQ and S&P, that's a candle of indecision. You could, even though it's a bearish harami, still has to be confirmed. Candle of indecision can move in either direction. It can be a continuation or a reversal pattern. So keep that in mind. We still have this nice looking rising wedge on the NASDAQ, and it looks very similar to the rising wedge on IBIT, the Bitcoin ETF, in the 60-minute time frame. They look almost identical. But here we've had this divergence that has taken prices sideways. Do we end up getting a pop higher and then get a pullback, or get something even bigger closer to the high over here, end up overthrowing it? So again, very, very possible. And sometimes rising wedges you overthrow, but overthrow the upper boundary. But do we end up turning back up and seeing a larger divergence develop? That's still a possibility. We don't break down immediately with the doji. So again, we start breaking the trend line. You start taking out the 50 period right here. The risk is you get a smaller pullback or a bigger pullback right here, right now. Now, we're still at the trend line. We're still at the 50-period moving average. We've seen the diversions take prices really in a sideways direction. If we end up popping higher, the RSI could still go back up. The MACD can firm up at the center line, and you could still go higher. So again, flexibility, important. Being patient and let the market make its move rather than guessing which scenario is going to play out. But again, right now, things are still bullish at the moment. NASDAQ 100 was down 0.37%, down almost 80 points today. And again, I believe the bottom is in. I believe this is corrective over here. I believe that we've have wave 4 done in an ABC. I believe that we've now started minor wave 1 here, and maybe it's done, about to finish. But again, this possibility is that we still go higher, challenge the February peaks. Now, the risk is we're forming these rising wedges. They may not be done yet. We still may go up and push up into, as I talked about on the 60-minute chart, up into that upper boundary another time, or even try to overthrow it and get a lower high. If we continue onward and upward with the extended wave 3 scenario, again, the trend line here then comes into play directly overhead. So could we still build upon this? Again, if we take out the trend line, the 10-period moving average, the 50-period moving average, and the 60-minute time frame, then we could try to get a pullback. And again, these clouds then come into play here on NASDAQ. The 50-period here, it's curling up. At some point, you're going to pull back towards the 50 or the 200 or both. Had the death cross. The death cross is likely marked the bottom. As I've talked about, that is often the way it plays out. We've had their death crosses in the daily time frame through this long-term bull market up the 2009 low. We've had several times where we've gotten the death cross and it's marked the bottom. Dropped 25.5%. Did that death cross mark this bottom? We got the bottom, and then we got the cross right after that. We have rising wedge patterns. Maybe they're not done yet. We'll see. If we start to break down, we start to see evidence, we start to get confirmation of the bearish harami pattern, then the pullback. Then it's time to be watching. Is it just a mild pullback, or is it the bigger pullback? Is minor wave 1 done, or are we still forming it? The extended wave 3 just, still under construction, or are we getting subwave with extended wave 3 being done? A couple of different ways it can play out. So flexibility is very, very important. About getting back above the 200-period moving average. Remember, I talked about that we're going to go to the 200-period and we could just blow right past it, blow right past the cloud, and then pull back to the cloud. That is what's in play here. Either continuing on higher and doing it, or doing it right here and now. But again, I'll be watching these rising wedge patterns. I'll be watching the bearish harami patterns to see what becomes of them. Bitcoin can rally higher. The market still may follow Bitcoin. Sometimes they have periods of short-term decoupling. I said Bitcoin has been rising and the market's playing catch-up. I saw somebody not too long ago, as I've said previously, about how the market's rallying and Bitcoin soon follow. No. It's the other way around. Bitcoin is the leader of the pack and the market is following, trying to play catch-up with Bitcoin. I expect we're either going to get a lower high scenario here or a higher high, and then get some kind of pullback and then go on and make new highs. So if we get a higher high, it'll be a failed breakout above the February highs, and then we pull back, or lower high, pull back, build momentum to clear that area. So those are the two scenarios that I think are really in play. I believe are going to go much, much higher. Here it is on the S&P 500, the rising wedge. So the risk is that wedges break down, we take out the 10-period moving averages, and we see the bearish cross patterns begin to play out and mark a reversal. It's the risk here. Now, Bitcoin can continue to try to rally towards the January high before the S&P and the NASDAQ. Market may follow it higher, either with a lower high or a lower high at higher levels, try to move above the previous peak. Here, I think that Bitcoin is going to attempt to go up to this trend line right here, get a failed breakout, get a head fake, and then I think it'll get a bigger pullback. If that is the path that Bitcoin follows, the stock market very well could follow Bitcoin. It usually does. It could be forming a massive inverse head and shoulders pattern, so could the S&P and the NASDAQ. The pattern doesn't have to play out, it doesn't have to set up, but it very well could. And right now, I mean, Bitcoin started to sell off today. Right now, it's up over 1%, almost 1.5% right now. It's going to make an attempt to go to a new high. And if it can rally, the stock market very well could follow Bitcoin. Extremely bullish on Bitcoin. My signals called the very day of the bottom for Bitcoin, predicted this rally. One of the reasons why I called the bottom at the bottom for the stock market and predicted a rally, because I knew it would follow Bitcoin. On the same day, but then Bitcoin began to form. The stock market's now playing catch up. A boatload of bottoming signals for both with the week of the launch of the tariffs. Kramer and the herd and the bears are all telling us we're about to crash. The opposite happened. I think this is a very, very strong possibility here that we get a, and when we go up here and we break out, everybody's going to go, it's a breakout, and it's probably going to be a fake out, and you're probably going to see this happen and have Bitcoin drop back below 100,000. That could be the path that the S&P and the NASDAQ takes, where they go higher, not necessarily moving to new highs, but they could, and then we get a bigger pullback. So keep that in mind, that extended wave 3 scenario, those abilities there. We're still in wave 3, or maybe we start to get the subwave 4. I think those are some very realistic possibilities. This is Bitcoin's daily chart. We talked about these possibilities for the NASDAQ and S&P. Here's the NASDAQ. Again, the high from December and February could be pointing to the next high, and we're not too far away from it. From the peak here to the low, we've now moved above the 78.6 Fibonacci, so we could very easily go to challenge that high. And if we get a pullback, it still might be in this larger extended wave 3 scenario that I've been talking about. Like I said, we still may get a wave 3, a 4, and a 5 and still go higher and end up forming a divergence on the RSI and the awesome oscillator. Check daily chart here. And again, we've gotten a rally of 30% pullback, but things can remain bullish. We could just keep going and try to get a false breakout, much like what I'm looking for with Bitcoin. We may get a pull. If this happens, it may be a pullback where it's very similar to what we had happen over here, but it also could be deeper. It could be a deeper pullback, and you can have a lopsided pattern where the shoulder is not as deep as the right shoulder, and that is certainly a possibility. Or if we don't go to new highs, we could still have an inverse head and shoulders here with a downward sloping neckline or at a little bit higher level. So just a lot of different possibilities. Again, we're at a disadvantage because we don't know the future, but we can certainly see support and resistance levels. The fact that we cleared the 78.6 Fibonacci is a very positive thing, but we have these gaps, and eventually we will come back and fill the gap, whether we get a pop higher and do that or try to do it immediately. I think you're going to fill this gap. I don't know about this one down here. We may fill that at a much later date, but that would be a pretty deep retracement. But again, still bullish at the moment. We'll see what happens. I think for the S&P 500, and again, it could be NASDAQ goes and makes it closer to reaching the high. It's up 30%. The NASDAQ reaches that level, this trend line, but the S&P falls short of it. So again, just something worth paying attention to. But we did get bearish inside days. We'll see what becomes of the doji candlesticks. If we do move to a new high, again, it's likely we're going to stall at this trend line if the momentum continues without any kind of meaningful pullback. S&P daily here.